We're here with Patrick Dunwell from Precision Trading Labs, and we are a New York City-based trading community. We teach people how to trade by taking less risk and making more money. Patrick came up with a pretty cool topic today for a video, so we thought we would just record it and have it for you guys to learn a couple of things. And Patrick, why don't you tell us what we're going to be talking about today?
Yeah, so a lot of we're trying to touch on some of the biggest problems and issues that beginners have when they're learning how to trade. And one that we run into all the time is people struggling with using stop losses, which I thought is kind of interesting because at first, a stop loss seems like a very logical thing to use to protect against the downside, but so many traders have such a hard time using it, and there's so many arguments they have against using it, and to us, it's so essential to our strategy that we thought we'd kind of make this and at least have a discussion about why it's so important that you use them. Because I tend to think that it's the difference between profitable traders and losing traders.
Without a doubt, yeah. I mean,
why do you think it's so important?
First off, I think it's really important because you're always if you're not using a stop loss, you're one bad trade away from really.
And we're talking about trading, not investing.
No, without a doubt. Yeah, this is
if you're investing and you want to
30 years, whatever, 10 years, whatever. It doesn't
totally different.
Absolutely.
We're talking about short-term trading and how to be profitable in the long run. And I think too many people will look at their trading performance on the last trade, right?
Yeah, without a doubt. I mean, anytime you're like, oh, I'm not doing well, like, you can have a series of green trades.
Right, they get stopped out and they think, oh man, now I'm down.
Yeah, and it's just not the truth.
If I didn't have a stop, maybe I'd still be in it. What do you have to say?
No, without a doubt. I think traders need a stop loss because otherwise you're one bad trade away from really harming your account. A bad trade doesn't reflect on you, it's just a bad trade. So if you use a stop loss, your trade's just over. It's not the last trade, it's just okay, that trade's over. So if you're a long snap today and get stopped out, and tomorrow you have a long trade on Apple, and you make money, that trade's over. You're not judged by any of your last trade. It's just a bad trade. It's not the end of the world, and it's just a small loss. It's not the end of the world.
You always talk about your stop outs and your losses as a cost of doing business, and the way we trade is based on risk and reward. We always define our risk before the trade. So let's say we are only going to lose $200.
Yeah.
We look to make at least 2 to 3 to 1.
Without a
from that.
2 to 1 would be a minimum.
If you're going to risk $200, we look to make
4 to 600,
right, on that trade. And in the long run, you can be profitable even being wrong over half the time, you can still be profitable. But you have to define your risk and you have to stick to that. And the only way to guarantee, more or less, that you're going to only lose X amount is by
using a stop loss. Yeah, absolutely. I mean, when you get into your trade, you have to know if this trade goes against me and I lose money, what is that amount, right? So if you're going to lose $200, at least know it's $200. Okay, great. If you're not using a stop loss and you're just using, mental stops or like whatever I'm going to think about how much I'm going to lose, you're in for a lot of pain. Yeah. Because if you just lose the 200 and you're on to the next trade, fine. But if you have to assess every trade over like a series of occurrences during the day, and 200 becomes 400, 400 becomes 600, you should just know it's over. When this trade hits my stop loss, move on to the next trade. You can get
it takes the emotion out.
It takes all the emotion out, and you don't necessarily need to be a robot. You just need to be able to follow some guidelines. And a stop loss is the most basic guideline where I'm going to be wrong. Yeah. And if you don't start there knowing how much, because you don't want to do any kind of irreparable harm to your account. If you decide I've saved $10,000, I'm going to put this into trading. It doesn't have to be 10. It can be $2,000. It can be $5,000. But whatever you start with, put that money in there and treat it the way it deserves to be treated. Know that if you put 10 grand in your account, every losing trade I'll lose $100 to $200. Not put in 10 grand and I'm going to just piss it all away, or I'm going to lose half of that. You're in big trouble then, because it's going to be very difficult. Not only do you have to get back to break even, to get profitable, you have a long swing to get to, and it's going to be tough. Not to say you shouldn't do. If you're in that position now, what's the most important rule in you're digging a hole, stop digging. Like if you're in a hole, stop digging. I would say that would be the first step, is just to stop digging, reevaluate where you are, and then use risk reward or risk management to get out of that hole. But it's going to take a little while. You need to plan out how you're going to do that.
So just to play devil's advocate, some of the arguments I've heard against using stop loss are, like I was saying, getting their stop wrong by a market maker. They think there's all this nefarious activity going on in these dark pools and things.
Yeah, I hear it all the time. I've used it before. I'm guilty of saying that once or twice myself, but not a lot,
or just the various reasons out there. What do you have to say to some of those things?
I think it's an excuse in most cases, where like you mean to tell me that every one trade you got stopped out, that cost you a lot of money? Because it should have just been a bad trade. If you get stopped out and you watched it go the way you thought it was going to go, okay, move on to the next trade. If you're still sitting there saying like, okay, I was long, Exxon, and it stopped me out.
Why do you think people have such a hard time when they do get stopped out?
Can't admit they're wrong.
Yeah.
I mean, without a doubt, I would say it's really they just can't admit they're wrong, and
you always mention the importance of emotion and getting rid of your ego in trading.
Without a doubt, I mean, it can be. And
the stop loss is kind of.
If you can't just admit you're wrong and say that when this trade gets stopped out, it's over. That trade is just a stop out. It is literally, you used a great phrase before, the cost of doing business, because that's all it is. I mean, one stop out should not be accounting. It should just be the cost of doing business. Today I lost a few bucks. Tomorrow I'll get it back. If you're seeing stop outs consistently, you may want to reflect on how you're trading and what you're trading. Could be actually that would be a good next video about like if you're losing money, how to determine where the flaws are. But if you're seeing that consistently, you mean to tell me algos are just watching you constantly? You're watching you, right? Yeah, algos are watching you, or they always trade whenever you're. Right. It happens to be whenever you're trading, right?
Do you think it could be a way that other traders just kind of try to put blame on something else?
It's like anything else. Like I can't lose weight because there's a McDonald's across the street.
Right, that's a good one. Yeah.
I don't go. The gym's only open between 9 a.m. to 10 p.m. So I can't go. It's
right.
All right. Well, you have a floor to do push-ups and crunches on. It's just another excuse and like anything else. Yeah. It's just a way of saying in trading. You also shows me you have very little faith in your strategy. You think one trade is ruining your account.
Right. If that's the case, maybe you have a flawed strategy, right?
Yeah. I mean, if your strategy is not determining where you're wrong, I find you have a flawed strategy. Your strategy should tell you how much you're going to lose on that trade.
Let me ask you this: you've been trading for years. How long now?
8 years now.
Okay.
Yeah.
Professionally.
Yeah.
And you've met a lot of traders. You've taught a lot of traders. Have you ever seen any disasters where it was because of a stop loss and that disaster could have been avoided had they just used a stop loss?
Without a doubt. So there's a handful of little ones that stand out in my mind, but then there's just one big one. When we were in a trade room in Midtown, there was a guy who used to sit in the trade room. He was an older guy, and he was trying to trade some retirement money, set aside a chunk of money to.
He wasn't using our strategy.
No, I wish. I would have really saved him. He was kind of inventing his own thing where he would see what stock was strong that day and buy it before the market closed. Yeah, this is a true story. And so his methodology basically
hold it overnight.
So he didn't care about gap risk or all the things that could go wrong. So if whatever stock was strong that day, he'd buy it, and he would buy quite a chunk of it. He didn't, just buy 100 shares or 10 or whatever. He had no position sizing first off. So he would buy the stock, and so this one day we didn't know he was headed on a downward slope for the days prior to this, but where it came to its crescendo. Mitch and I just remember we went to meet with the student one-on-one, and we were like, oh hey, you're doing fine doing this, here's what you need to do with it. And we had a 20-minute meeting, and it was earnings season, but we were flat. So we go back in the trade room from the conference room, and we go into the trading room, and it's just like someone died. It's just quiet, and it's eerie quiet, not just early in the morning and everyone's trying to get there doing their research, whatever. It was and then one of the guys in the corner is like, hey, I don't want to use his name, so such and such, tell Ryan and Mitch what happened. And he's like, oh, it's not a big deal, this kind of stuff. And he's like, no, why don't you just tell them, maybe they can help you. And I'm like, what happened? He's like, well, I got a margin call. And I'm like, oh, what? What are you talking about?
Something you never want to hear.
Yeah, oh my god, so like his broker called while we were in the conference room for 10 to 20 minutes, and he was long Twitter why they had an earnings announcement, and the day before they had already gapped down like $10, they went down another $5, so he took a $15,000 loss. He bought Twitter, let's just say, I don't remember the exact numbers, I think it was 30, and now he's down around 15 or so. So he took a $15,000 hit, and he was trading on margin. So overnight margin's like 2 to 1. I don't really, want.
And he was probably, the crazy thing is, he was probably only trying to make $1,000 at most.
Without a doubt. Yeah, without a doubt. Without a doubt, he was just like, if he made $2,000 a week, I'm positive.
There was no risk control on risk and reward.
No, not at all. He was watching because the days leading up to that, they were already
you're risking this much to make this much.
Without a doubt.
Does that sound like it makes sense?
It had like this little, and this was like one of those things where it had a little moves down every day, and he's losing money, and then finally the earnings report was like a nail in the coffin, and it was $5,000 gone, and then the phone started ringing, and he had like some other long-term stuff. He had to liquidate that to pay the margin on Twitter. And
man, that's an expensive lesson.
That's an expensive lesson, and to watch an older guy go through that, and I've heard other stories, people just like losing money, but that one stands out in my head because I just didn't like it because he didn't need to do that.
And it's easier to learn your lesson that way than it is just taking our word for it.
Oh, without a doubt, yeah.
Everyone learns the hard way.
This is like he's sitting in a room with pro traders, and 2 of them willing to help him, which is Mitch and I, and just couldn't bear himself to do it. And he had gone different places to learn to trade. He just couldn't do it. He invented this asinine thing of buying at the end of the day, and that's the biggest blow up. And if he had just gotten stopped out one of those days, he did bad. Like if he bought at 30 and it went to 28, and he took a small loss, he would have saved him.
Yeah,
that's a big hit, $15,000 on an account or whatever it would turn out to be.
I think you've covered some great stuff here.
Yeah.
I hope you guys found this helpful. If you guys want some more information about how we trade, go onto our website. We have a great blog with tons of useful stuff there. It's precisiontradinglabs.com. I think we'll probably have the link in somewhere.
Yeah.
And be sure to subscribe to our video or our channel for more videos like this. And if you have any ideas on videos we should do, just feel free to either drop it in the comments or email us.
And on risk management, if you go to the main website, right at the beginning on the first page, you can put in your name and email address, and we'll send you the roadmap to successful trading. And in there, we have a lot of risk management elements that are like you can incorporate into your trading now. You don't have to wait and learn our strategy. You can just take some of those elements and
that's free.
It's completely free. Name and email address. Throw it in there. When we say pick a strategy and all this kind of stuff, then we have a lot of risk management stuff in there that are like little tidbits. And feel free if you have questions to email us, and we'll talk more about it.
Cool. Well, thank you guys for listening.
All right. Have a good day. Thank you.